All right, what the heck happened to the stock of Target yesterday? Company reported a great quarter. The stock opened strong, but then it rolled over, finishing the session down nearly 3%. It got hit again today. You might look at the action and assume something was wrong underneath. Couldn't be further from the truth. Target posted a phenomenal sales and earnings beat, with the same-store sales up 10.8%, digital sales up 141%. I keep telling you this company is one of the few retailers that's actually a winner from the pandemic. They have the scale and the web presence to thrive, even in an environment where people are afraid to go shopping, and they offer value. So why did the stock get hit? In part, it's because management didn't issue the guidance people wanted maybe for the current quarter. They stopped. It's too hard to forecast, of course. There were a few pockets of weakness. Apparel. They've had to spend a lot of money to rapidly expand their digital business, fix stores for safety, and, of course, reward loyal associates. But maybe I think Target sold off yesterday because the stock had run up dramatically. Going into the quarter, expectations of greatness. You simply had a bad setup. After this pullback, though, I think we need to focus on the scale of the opportunity because it is huge. So let's check in with Brian Cornell, the bankable chairman and CEO of Target, to get a better sense of the quarter and where his company's headed. Brian, welcome back to Mad Money.
Jim, good to hear your voice. I hope you and your family are safe and well.
We're doing great. I hope same for you.
Same here.
All right, so, Brian, I want to try to explain to people at home why a company could report great numbers and Wall Street doesn't understand it, but the Main Street people who are watching do. Basically, you have millions of new people who have come to Target who might stay, and that was the important thing about the quarter.
Jim, I have been at Target for years now. I have never been more proud of our team and the way they performed during this pandemic period. And yes, you're right. We have millions of new shoppers who are experiencing our store, our online capabilities, and I think we should be really proud of the progress we made during this quarter. It's not every day you talk about comps at 10.8%. Our stores were up 1%. Our digital business grew 141%. But behind that, all of those same-day fulfillment options, order online, pick up in store, drive up, having a Ship shopper bring something right to your doorstep, those grew by almost 300% during the quarter. So I think we've got a lot to be proud of, a lot of momentum. We're building market share. And I think most importantly, Jim, we built trust with American consumers during the pandemic. And the investments we made in our team, the investments we made in safety, those are going to pay dividends for years.
All right, so, Brian, let's talk about the cadence, because I thought that was most important. Some of the analysts focused on apparel. Hey, come on, at the beginning, who was going out? Who needed apparel? As things got, let's say, people got more used to the idea of going to Target, you got more and more repeat buyers, not just people who just sampled, and these people probably have stuck with you since May.
Well, Jim, February was actually a pretty normal month. Our comps were up about 3.8%. Our digital business grew by 33%. By the time we got to April, our business grew by 16.5%, and our digital business up 282%. And we saw strength in April across our entire portfolio. I mean, the big winner for us during the first quarter was our hardlines business, with business over 20%, categories like electronics, as Americans were sheltering in place and working and educating from home, grew by 45%. The food and beverage up 20%. Our household essential business up over 20%. And we had a huge boom in kitchen, up 25%, as people were obviously entertaining and eating meals at home. But come April, that apparel business also bounced back. And as stimulus checks arrived and we continued to build trust with America, they were shopping in our stores, taking advantage of online, and we saw that apparel business bounce back. So it's the strength of our multi-category portfolio, the ability to shop in our stores and online, that I think was really important during the pandemic.
Brian, there's a couple of, I think, misperceptions, but maybe I'm wrong. Some people feel that there's only room for Walmart and for Amazon. As a Target shopper, I don't really get that. Some people feel that you'll never make a lot of money with this pick up at store initiative, that it's too labor intensive. Can you dispel that the gross margins will always be bad for pickup, or that there's no more room than for Walmart and Amazon?
You know, Jim, we've talked about this for several years now, and we talked about kind of the digital economics. And when you move from shipping from a distribution center hundreds of miles away to actually shipping and fulfilling from a store, if we ship from the back of our store, or we pick and prep and pack it and have UPS or FedEx deliver it to your home, about 40% of the cost goes away. But when you use drive up or pick up or shipped, about 90% of the costs of that digital fulfillment go away. Those look much more like a store transaction. So we're confident that over time, we're going to blur those lines between store transactions and the same day because, again, we made a decision years ago that many questioned. We said our stores are going to be the hub of our fulfillment strategy. Everything evolves around our stores. And when you're ordering online and picking up in a store, well, yes, we call it a digital sale, but you're coming physically to that store. The store does all the work. When you pull into our parking lot, that team member walks out, puts it in your trunk, contact free, and you drive off. But the store's at the center of that. Even with our Ship shoppers, they come and shop our Target store, and then 2 hours later, they're bringing it to your home. So what makes us so different and gives us so much confidence in our economic model is it all centers around the stores. And our stores are so productive right now. We talked about stores growing by 1%. But when I think about what was purchased at a store as you were checking out, what was purchased when you ordered online and picked up in a store or pulled into our parking lot or had a Ship shopper fulfill it, those store fulfill comps, they actually grew by 9%, over 9% during the quarter. So our stores are more productive than ever, and that's going to fuel our profitability over time.
All right, and then one last thing. You spent a lot of money investing in people, which is what we want to hear here because of COVID-19. But I'm curious to know the consumer themselves want to wear a mask, feel more comfortable with masks, don't mind social distancing, don't want to get out of the car. Where is the consumer in the era of COVID-19 now?
Yeah, Jim, I've got to spend a couple of seconds talking about the $500 million we invested in the health, welfare, and safety of our team that extended to the guest. And I know there were some questions about, did we spend too much? And I would tell you, I will never apologize for investing in the safety and health and welfare of our team. From day one, when we knew we were going to be an essential retailer and be out there providing America with the medication, the food, the disinfectants, the household products that they needed, we said we've got to take care of our team. And we gave them premium pay in both our supply chain and our stores of $2. We gave anyone over 65, pregnant with a pre-existing condition, 4 weeks paid leave. And we gave backup care to our entire team. And we also obviously invested in safety, making sure we had people who were regularly cleaning and disinfecting surfaces. We put the plexiglass shields up. We committed to social distancing and made sure there were decals on the floor. We're metering guests. Our teams get masks and gloves every day. We've tried to create the safest environment in retail. And that's a big part of what's going to be so important going forward. Yep. Because I think American consumers and our guests, safety is going to be important. And I think we saw the kind of results we delivered in this first quarter because we invested in our team, we created a safe environment, and our team and our guests trust shopping at Target.
Well, Brian, I as a faithful Target shopper, I couldn't agree more. And I want to thank you for taking the time out to come on Mad Money. It's always great to talk to you.
Jim, good to hear your voice. Thank you.
All right, that's Brian Cornell, Chairman and CEO of Target. Remember, they said that they were going to do well when it was at 112 last time, went down to 106. People were upset, and then the next stop was in the 120s. I think the same trajectory could happen again. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.